Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as I go through it. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all these topics, subjects looking for potential investment opportunities, sharing them with everyone in the community. And we do have a special coupon code going on. Special is the coupon code, 50% off savings for the first month only, and on the monthly membership, and a larger discount on the yearly membership if anyone wants to sign up directly to a yearly or switch from a monthly to a yearly. Let's dive in, take a look, see what's going on today. Looks like it was a pretty rough day today, as I've noticed. So we had big selling pressure in the DXY coming on down yesterday. Today that reversed, and we had some strong DXY or dollar strength, relative strength to the upside. It was up about 1%. This is generally what you see when you see fear in the market. You start to see a move higher in the dollar and lower yields. As we look at yields, like the 2-year yield, we see a big wick at the bottom there. So they drove it down throughout the day, got a lot of fear in this market. Lots and lots of fear. They gapped it down in the morning. I think that was the right one. Hold on, let me see here. Let me back up. Yeah. So that's the daily there. So they drove it down in the morning, and then I think they probably offloaded a bunch of maybe bonds throughout the day, causing yields to come back up throughout the day. We also see on the 10-year something very similar there. Big wick at the bottom. That generally indicates a bottom. It could. We call it a hammer candlestick. You grab that big wick, and then the top's the little hammer that you hammer with. Those generally indicate a potential reversal point. If you look at it from a short-term point here, you get a downtrend line that's broken to the upside. That's what the wick represents. That's why people say that it could be a bottom. It's because you get a downtrend line break and a potential reversal higher. We'll see what kind of follow through we get, if there is any, and what it looks like next week. 30-year also very similar. They push yields down based off the tariff information, but here we've got not much buyers willing to buy the debt that they were releasing into this market. So what they did is they used the tariffs to create volume buying pressure in this. And a lot of the times you get a double bottom here, potentially. And could this work its way on up? That is a bottoming candlestick, and we call it a hammer candlestick. So maybe we got a chance to go higher here. But again, the uncertainty in the market, who knows what occurs next week? Could be anything. Get ready for anything. TLT up 1.1%. We're up against resistance. There's that resistance line that we've coming up to. Are we going to punch through it? Now, think about the motives here. Their motives is they need to refinance a bunch of debt. So maybe they keep the pressure on, and maybe they try to really tank the markets to restructure the debt in the short term. Difficult to say. That's one person's or a couple people or a group of people's opinions on what they're trying to do there. But this is a retest, and a lot of the times they fail. So who knows? We've got the 2 and the 10. This is interesting. When you look at these crises, generally the 2 and 10 drop. They drop like a rock. That's a crisis coming through here. You see a large move lower in the yield curve. Another crisis was this big move there. We started dropping rapidly before the crisis occurred. So what you'll see is you'll see positioning in bonds before the crisis occurs here. That was the crisis. 2000, this was 2000 right here, I would say. Yep, there is 9/11. There's the housing market. C19, you could see people were positioning, and then it really took off to the downside. Each one of these was a big slowdown in the market. But what do we have here? This is an interesting setup, and it makes it very difficult to know which direction we're going. We don't have a dive bomb in yields where the yield curve is unwinding. I should say not unwinding, but uninverting yet, at least not yet. But we've got a technical chart setup, which is a 3-hump consolidation and a falling wedge that generally breaks higher, which is interesting. And then you go and we zoom in and we've got an up candlestick. That's a reversal candlestick inside of the falling wedge, which means that we've got some sort of support to go higher and invert the yield curve. I don't know. That's what I'm seeing. That's what I have to call because that's what the charts are telling me. That's what I'm seeing. Now, some people are going to say, well, it's gonna potentially drop. Maybe that's why Trump released the tariffs when he did. Maybe that's why he did all of these actions is because the setup is going against him. Maybe he had to pull the trigger and not a lot of people knew about that trigger and they couldn't position really much before it. We were seeing silver start to break out. Gold was running hot and heavy. We have this bullish setup where the curve could invert again. We had oil starting to put in a bottom and start to break out of its falling wedge. So yeah, he released the information and they slammed the crap to slow down the move of gold, silver, and whatever. And they probably just made up whatever tariffs they did and just said, throw it out there. It doesn't really matter what it is. We need fear in the market and uncertainty. Maybe that's the case. TYX, TNX ratio, we were popping higher yesterday pretty hard. There it is. But we do have a reversal candlestick here. Keep in mind, a lot of times you get a breakout and then you get a reverse, probably closing this gap and doing a retest of that breakout. Very possible. So no real huge tailwind behind gold today. We had a strong dollar too. Gold down $63 an ounce. It is closing this gap here, which a lot of the times gaps do get closed. We started to run pretty good, and then the last 2 days we've gotten hammered. This tariff information, as weird as it is, I don't think it would really impact gold that much, but gold's getting smoked, probably on purpose. We've got silver down 7%. We were coming on up. Things were looking pretty solid here. Small selling pressure, all that stuff. And then the last two candlesticks, that's the tariff information. Could someone have guessed this beforehand? With me looking at the chart, I don't know if I would have not guessed that this would have been the outcome. I would have not guessed that. There's no signs in a lot of these charts where I would have said, yep, tariffs are going to be absolutely horrible. Something bad is coming. This is a bullish formation. Big buying pressure, small selling pressure. These are all bullish formations right into tariffs. I think they were scared that this was going to break out and run, and that could cause a problem with yields because gold and silver, they're mechanisms to show the world that there's a debt problem. And I think they're pushed against a wall. So what they did is they said, screw it, we're going to manufacture something, yank these things down and slow the move. My guess. Platinum also getting hit 4%. This is actually a really good entry point for a long-term investor. 917 is pretty cheap. It's on support. Now, could we get driven lower in the short term and down here and go way below the cost curve? The cost curve is about $1,100. It's up here, maybe a little bit more depending on these new tariffs. Who the heck knows what it is now? But we could go down, but it would just be a better buying opportunity, in my opinion. Palladium down 2%. We're back to support here. Again, it's finding some support. That's why you're getting a little wick at the bottom there, a little one. And this is generally a good spot to be looking for palladium. Palladium, it is the out-of-cycle metal. I'd rather choose platinum. Could this get driven down lower? It very well could. If uncertainty continues in the market and we continue to have, we'll call it tariff wars or whatever comes next, yeah, it could be driven lower. That's the whole uncertainty injected in this thing. XAU to gold ratio getting slammed pretty hard today, down 7.5%. Not much was spared. Not much was spared today. And we're back to that support level. That's probably what they want, though. We've got GDX down 8.84%. That is a pretty bearish looking candlestick. But here's the problem, though. Is it an organic move? Is this a legit move? And the uncertainty in the markets, it's very hard to know if this is a legit reversal candlestick. Could they come out and release tariffs and whatever, and then rocket this thing to the upside? Yeah, it could. they could keep it on and try to drive this thing down because they don't want gold to go higher. So that's where things get real iffy. Things get real iffy. We had a nice candlestick yesterday, but today it got slammed. Same with GDXJ, same with SILJ. They're all in a similar situation. We got kind of this upward facing pattern. Those are generally bearish to go lower. Just an FYI. These upward facing patterns are generally bearish. We got crude oil down 6.5%. It's got a huge wick at the bottom here. This is kind of weird. These wicks at the bottom means that people stepped in and bought it up. In the aftermarket or pre-market, however you want to say it, we got sold off rapidly. Very low volume. Someone definitely wants oil to go lower. Then when we open, you can see the momentum kind of slowed down in early pre-market. We put in kind of like a double bottom here, perhaps. And then we're coming back up, trying to put in a bottom and maybe work higher. But with the uncertainty in the market and with Trump kind of pulling the levers here, that to me in these pre-market, like post-market, pre-market, you can see during the day it was flat. During the day it is flat. But aftermarket, we're getting rolled here in the aftermarket hours. So we'll see what happens Sunday night, if they roll this thing again or what happens. The reason they're targeting crude oil is because there's a relationship between crude oil and the 10-year yield. They want the 10-year yield down. So this relationship, you can see oil kind of front runs this thing. This was coming out of the ridiculous bottom here, but there is a relationship where this kind of runs up. As you slow down, remember, they release strategic petroleum reserve barrels to get oil down, a whole bunch of it. And that's to slow down the rate in yields. You can see yields eventually slow down, and we're chopping sideways. Now, it's difficult to know what's going to happen here. If this drops, and that's what they want, the 10-year yield to drop, they're going to have to drop oil with it. Oil is underneath the cost curve, and it's a tough call here because some people say, well, Andy, you're wrong about oil. It's like, well, not really. I mean, these are not market forces that are driving this. This is a person who put this in place. We were breaking to the upside here. We did it once here. They brought it back down, and we were breaking out again here, that wick. And then the last 2 days got absolutely hammered. And then the thing that's kind of weird here is that happened across some asset classes like gold, silver, platinum, palladium, and these two. They're all the inflation-sensitive assets that they're hitting. These are also, this is a translator of inflation into the consumer price index. So big question mark on how this plays out here. Could we go higher and then roll over again? That could very well be the case. We could get a bounce and roll over. If he releases tariffs, which I'm not, who knows what he's going to do, that could easily push it all the way back up. But this is going to destroy the production of oil in the world. There could be other factors behind this. If we are hitting peak oil, which maybe he knows, maybe he doesn't, he's going to hit and go into a recession to kind of slow the move of oil higher. And this is definitely working at this time. We've got TTF gas down 6.7% here. Potential double bottom, but again, it's broken underneath this resistance line, and it's been rolling over a little bit. But sometimes you get double bottoms there. Natural gas down 7%. We're back to support for natural gas in America. And most everything was not spared. Our boy XOP getting smoked to the downside. Get a little wick at the bottom here. That was down 10.6% today. If I were to overlay, I mean, that does look like a really bad candlestick. Definitely could have further downside. If I were to look at the way that we fell, mirror it or flip it over and run and overlay it, this is kind of what we get. And we are real close to that potential bottom if it were to mirror exactly the other side. So we're probably a little bit above. We need $98, $99 for this bottom here, roughly speaking. We're at 106.66, so we're about 106 right now versus 99, which was the bottom here. That would put a pretty good asymmetry, or I should say symmetrical, not asymmetry, symmetrical looking chart there for an inverted shoulder, head, shoulder, and the potential break higher. I still think this pattern is game. OIH down 12%, another one that's getting hit really hard today. With oil prices where they're at, the energy service companies are going to struggle, and that's exactly what we're seeing in these two big, large selling pressure candlesticks. Newcastle coal futures down back to support. That supports that big long-term trend line there. We're right on top of it. And again, nothing's been spared today, guys. Everything got hit hard. Sprott Physical Uranium Trust down 6%. We had a great setup here. With the tariffs in place, things become uncertain. Big question mark. Big selling pressure the past 2 days in Sprott Physical Uranium Trust. We had the setup going here with a nice big bullish engulfing. And then the big buying pressure, small selling pressure. And then they released that information, and I don't think insiders knew about this. Some of the insiders, they would have positioned differently here, in my opinion. Uranium futures pricing down 0.46%. That looks like it's trying to bottom. We've got URA down 7%, pulling on back these past 2 days. We had a pretty good setup in Sprott Physical Uranium Trust, where I thought, well, maybe with the bullish engulfing we could head higher. But I was wrong. We had 2 down days here, and it was due to the tariff information, and everything got hit. It wasn't just uranium. URNM down 6.91, URNJ down 7.81. So we tried putting in kind of the double bottom there, and then we had these 2 days, the tariff days. Now the uncertainty is still there, guys. It's not been lifted. Nickel down 1%, and most everything getting hit. So some selling pressure there. Everything's intact, but again, the uncertainty still exists. Copper down 9%. We're back kind of within the pattern. And this is another thing that they want to hit. They want to hit this back down. They don't want copper running like a beast. But look at the move here. This is a bullish move. This is a bullish move that was occurring. We had bullish moves across the board. Gold was bullish. Silver was bullish. Copper was bullish here, setting up a potential move higher. And then they released the information to really hit this thing down. COPX getting hit pretty hard, down 10%. Lithium down 5.8. Nothing spared here, guys. Nothing spared. REMX down 7%, or almost 8% actually. Kind of at here. Now, is this a new break lower? This is where things get really difficult. I don't know if this is a true break lower, because he can lift the tariffs and say, you know, we've gotten enough people to negotiate where we're lifting it, and then it goes back up. Or he keeps it on and tries to drive things down further to put more debt in the market at lower interest rates. It's difficult to say. Iron ore down 1%. That's actually holding on like a beast compared to everything else. Aluminum down 3%. There's some stronger selling pressure there, just like everything. Baltic Dry Index down 2.7. We got emerging markets down 5.5% back to support. We'll see if that holds. Support's about right there. We've got MOO down 6%. That's fallen too, just like everything else in the market. Big gap lower. We've got KRE down 4% the past couple of days. This is we were going to go higher here. Just very interesting how the market was positioning to go higher and then just got slammed these past 2 days. We did have a bearish kind of run here. We came down. It looked like it was trying to turn. We have 2 bullish candlesticks here. And in all honesty, guys, this caught me completely by surprise here these past 2 days. Completely. XHB up 1.14. It's a bullish piercing candlestick potentially where we could head higher. Potentially. TAN down 4.8%. That's getting hit. Russell 2000's down 4.37. It does have a wick at the bottom. It looks like we have got support underneath here. Let's see where that's, the support trend line going across, or coming up across here. We'll see if we get support and if it can get a bounce. Now, we want to watch what the bounce looks like. If we come up in these small little candlesticks, very well could get hit lower. And that's what we'll have to see what the follow-through looks like. SPX down 6%. That's getting hit pretty hard, just like everything else. Big move, and it finished towards its lows, looking pretty rough. We also have the NASDAQ down about almost 6%, and that's also closed by its lows. That's looking pretty rough. This is a part of what I thought was going to occur. I didn't think Trump was going to do what he was going to do, but I saw that this was peaking. These are distribution candlesticks. I said, yeah, this looks like it's ready to go lower, and it's going lower. But I did not think or guess that we were going to do that in a kind of in kind of an on purpose move. I wouldn't have guessed that. I thought it was going to kind of naturally occur and slowly go lower. This is like ripping off, I don't know what, like a cast the day after you got it put on or something. SMCI down also 7.74%. We've got Nvidia down 7.4% or so. Big move lower. Bitcoin surprisingly up 1.72. Some people are saying, well, is this a safe haven? I don't know if I'd go that far, guys. We're still underneath resistance here. And we're going to have to see if this actually breaks higher. I'm not going to say this is safe haven yet. Ethereum down 0.4%. Pretty unscathed compared to most other sectors, though. Downtrend is still intact, though. MicroStrategy's up 4%, surprisingly. And it is holding on quite strong. We got the VIX up 51%. Massive move to the upside here. You can see it right there. And these were other previous moves that occurred. This was 2008. This was 2020. And that's the move we have today. So this is obviously a lot of volatility being injected into the markets here and a lot of selling pressure. Could we go higher? Very well could. There is the possibility there. As uncomfortable as it is, it's still a possibility. And we'll have to see what occurs coming on up. But that's where I'm going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. If you have questions, fire them away. I'll answer them on Sunday at 5 p.m. So that's all I've got. We'll catch you next time. This is Finding Value.